Well, hello, everyone, and thank you for joining us today. This is our final board bootcamp session of 2022. And for those who are here in Champaign-Urbana, you'll see we had some snowflakes coming down today. I feel that these are the kinds of days that Zoom is meant for. So we're so glad that you're here joining us for our session on understanding nonprofit financials. This is a really important topic for board members to understand, since one of your primary responsibilities as board members is to ensure your organization has adequate resources and to provide oversight of those resources. But we know that too often you don't get a lot of training on how to read these nonprofit financial statements. And so that is one thing that we're hoping to do for you today, is to demystify nonprofit financials and help you to have a better understanding so that you can carry out your duties as board members in our nonprofit sector. I'll be your facilitator this afternoon. My name is Genevieve Kirk, and I'm the Center for Nonprofit Excellence Director here at the Community Foundation of East Central Illinois. Our mission is to promote philanthropy in an impartial, unbiased, ethical way with a commitment to inclusiveness and to bring together people and resources to identify and address present and emerging community needs. In addition to the monetary support that the Community Foundation provides through grants and scholarships, we also want to strengthen nonprofit organizations through training and resources such as this, our board bootcamp series, and through other trainings that we do through our Center for Nonprofit Excellence. You can learn more about our work and sign up for upcoming trainings on our website at cfeci.org. I want to start with just a few housekeeping notes, some friendly reminders to please keep your microphone on mute during the session today. You are welcome to use the chat function to submit questions. We're going to offer a dedicated Q&A time following our presentation time, so take note of any questions that you'd like to ask to either of our presenters today, and we'll have about 15 minutes towards the end of our session to accommodate those questions. And also just a reminder that this session is being recorded for the benefit of participants who could not attend the live Zoom session. You'll be able to access this recording on our YouTube channel following today's presentation. So here is our agenda for today. I'm just going to start off by introducing our co-presenters to you, and then I will pass it off to Denise from CLA, who will tell us a bit about Nonprofit Financials 101. Following that, Andrea Rondell from the YWCA will cover what to look for in your board financial report. Then I will be back in to explain just some basics of the Form 990 with you. And then we'll go into that Q&A time for hopefully 10 to 15 minutes before we wrap up right at 1 p.m. So with that, allow me to introduce our speakers to you today. We are so pleased to welcome Denise Kappas, who is the Director of Business Operations at Clifton Larson Allen in Bloomington, Illinois. Denise has over 20 years of accounting experience, which includes providing outsourced CFO services to nonprofit organizations, as well as supporting day-to-day accounting and finance functions for many types of organizations. Welcome, Denise.
Thank
you. Here's your drink. Also today, we are welcoming Andrea Rondell, who is the Executive Director at the YWCA. Andrea is in her 9th year as Executive Director. She is in love with her organization's mission of eliminating racism and empowering women. She's lived in Champaign-Urbana since 1992. Andrea is proud to have served as the chair of the local Human Services Council and has been a founding member of the Latino Partnership of Champaign County. Welcome, Andrea.
Thank you very much.
Thanks. And will everyone please join me in offering a virtual welcome to both of our co-presenters today. Thank you so much for being here. And with that, I am going to pass this off to Denise, who is going to lead us in our first part of the presentation.
Hey, thank you. Okay, We're going to talk about Nonprofit Financials 101. So we're just going to have a general overview here for you. I won't get too detailed, but as Genevieve mentioned, a lot of you are new to this. So I want to make sure that you understand what it is that you're looking at when you are handed financial reports. Let's see here. First, we're going to talk about some myths. So these are things that are not true. Nonprofits cannot make profits. That's absolutely not true. Sure, Andrea will have more to say about that one for you. Next, we have nonprofits must have balanced budgets. I think most nonprofits probably try to have a balanced budget, but that's not necessarily a requirement. But that is a goal. And if it's not, that's okay. It's just a goal. Deficits are better than surpluses, meaning they're trying to say that it's better to have a loss than to actually make income, and that is not true. So it can go either way with nonprofits, and it can swing from year to year as well. And then the last myth is that income is more important than assets. Absolutely not. You do need to have income or you're not going to be able to function day to day, but you also need to take care of your agency as well. And assets can include a lot of different things, from buildings to bank accounts and that type of assets as well. And we'll go over that a little bit more too. So the 5 basics for financials are: there's 2 types of nonprofit income, and we have revenues, which are the self-generated fees and products that we sell, or we have the charitable contributions and grants that we often call support or donations. Oops, I skipped over one here. Financial information is based on periods of time. So the financial statements that you'll probably get at your board meetings, depending on how often you meet, are just going to be what they call financial statements, and that shows the past. So you may, if you have a meeting this month, you're going to have financials from last month, okay? Your future reports would be your budget. That's when you sit down and you look at next year. What are we going to look like next year? And then present would be to show a cash flow projection. This is where we think we're going to be based on what we have now. Numbers are meant to be compared. So you want to ask questions. That's part of a big part of your job as being on the board, is to ask questions. A lot of your reports are going to show actual versus budget. They could show current year to date versus prior year to date, current month versus prior month, or budget versus historical averages. If you're not seeing something that you want to see, you can ask for it, because usually your accountant can pretty quickly rerun a report to show you that data, especially if you're new to the board and you want to see some historical data. They should have that pretty easily. So don't be afraid to ask. Anticipation is the key to financial stability. This is very true. By the time you see those financial reports in your board meeting, that time's already gone. So if you come in and you think, oh my gosh, we're really low on donations this month, what are we going to do about it? You have to keep in mind that that time has already passed, and you need to give your managers time to plan and move forward. So it is an ongoing process. It's not something that can be rectified today. So just keep that in mind as you look at these financial statements every month or every quarter, depending on your board. Financial health is essential for the effective delivery of nonprofit services. Of course it is. You need to have a healthy agency. You do need to have money coming in. You need to be able to pay your employees, because they are the most important part of your agency. Now we're going to actually look at some of the statements a little, or talk about them a little bit more in depth, and then we'll actually see a statement of financial position. So when you're handed a packet of reports at the board meeting, which you will be, and it'll be very overwhelming, which is okay, you'll get used to it. You want to really look at the title of reports so that you know what you're looking at. Your audited financial reports, you'll see those once a year, okay? Internal financial statements, those, again, it depends on how your board is set up. Your agency will probably get them monthly, but you may only see them quarterly, depending on when you meet. Your Form 990 is your tax return that's filed once a year, and Genevieve's going to talk about that later. And then if you've ever been on a board before, actually worked with another nonprofit agency, there's that budget, which usually people run from that, but it is an important part. And lots of times the board has to approve the budget. So you'll be involved in that. So the audited financial statements are when you hire an outside independent firm, such as CLA or another CPA firm, to come in and audit those monthly financials that you're presenting. So we look at a whole year. We look at all the data to make sure that what you say on your financial reports is in fact solid information. There's also usually a report that is, sorry, I've skipped one, haven't I? These are the internal financial statements. Sorry about that. The internal financial statements are the ones that you get every month. And again, or every quarter that you would see. They compare, hold on here. Sorry about that. Okay. Let's go back to the audit. I'm sorry, I flipped through a slide here. Okay, so this is where you bring in a firm to look at your financials to make sure they are as they're supposed to be. The independent auditor's report, this is very important. A lot of people tend to flip right to the financial statements that the auditors have prepared, but you really want to read the report because this is where they tell you how good your organization is doing with their bookkeeping, with their accounting. It will tell you if there's anything that you need to work on, something that maybe needs to be presented in a different manner, or maybe some controls that you need to have in place. For example, maybe you need to have two people signing checks over a certain dollar amount and you're not following that. So you definitely want to read that independent auditor's report. Okay, the internal financial statements, this is where the ones that you get at your board meeting, could be monthly, could be quarterly, and they will show comparisons. I usually like to see the current month, so I would say that I would look at October, and then I'd like to see year to date. So if you're on a calendar year, I would see January through October to see how you're doing. And then I also like to compare it to last year. So I'd like to see October of this year versus October of last year. But again, these are reports that are really easy to pull together for history. So if there's something that you as a new board member want to see, just ask for it. And these financial statements usually include a statement of financial position. A lot of people call this a balance sheet, and a statement of activities, also called an income statement. Form 990 we've talked about briefly, and Genevieve will talk about it later. That's your tax return that has to be filed annually. And your budget is what you're planning to do in the next year or the next 12 months. Some people have rolling budgets. A lot of nonprofits don't. They usually just have a set budget for their fiscal year. And this is just what we plan to do. And, you know, sometimes things happen like COVID and your budget is shot, and that's just, you just have to roll with it. But again, ask questions. That's what you're there for. Statement of financial position. This shows your agency at a particular point in time. So if I run this report, I'm going to run it as of today, or I'm going to run it as of October 31st. It's just one point in time. And what this shows, it shows all your assets, which is what you own or what you have been promised. And I have that underlined because for nonprofits, that's a little bit, it can get a little bit tricky, I'm gonna say. So for example, if you have someone who comes to you and says, I really appreciate what you're doing, I've named you as a beneficiary on a life insurance policy, you have to put that on your books because you have been promised this. So that is an asset for you. Again, that gets a little tricky, but things to watch out for. It also shows your liabilities, so what you owe. And then the difference between those is your net assets. This is a little bit different than your for-profit world where this would be your net income or loss. Okay. Here's an example of one. So you'll see that at the top is the title, Statement of Financial Position. It's as of the end of their quarter. And I will tell you, this is really short because a lot of times what the board sees is very condensed. Okay, so this agency's, their statements are actually 2 full pages long, but this is what the board really gets. So when you see cash, that's not just one checking account. That's probably 3 or 4 different checking accounts. It could be petty cash. It could be any other liquid accounts that you have. The money markets, there's probably 3 or 4 there. It could be some with Charles Schwab's investment accounts. So don't take this at face value thinking that, oh, this is one account. And again, if you want to see the detail, ask for it because they will have that for you. So the top part, again, it's your assets, it's what you own. The middle section is your liabilities, which is what you owe. And then the bottom, so this accounting system is a little bit limited in how they can name their lines, their net assets. So really you should only have net assets with donor restriction and net assets without donor restriction now. So you would really only probably have 2 lines here. And then you're supposed to balance, which is why it's called a balance sheet. So you'll see your assets equals your liabilities plus your net assets. So they're balanced. Okay, and here's that again, assets equals liability plus net assets, and that's why it's called the balance sheet. And then the net assets, again, that is your, this balance sheet shows you from the beginning of time until, so if you have a bank account that you open today, and then in 10 years you run your balance sheet, it's going to show you the balance from that beginning of time. So the net assets represents all your net profits or your losses accumulated for all those years. So if you have a great year one year and then a not so great that year or next year, then this is going to show you the difference of that. And it just keeps accumulating from year to year. Statement of activities, I think Andrea is going to go into this a little bit more, so I won't talk about this a lot. Very important. This shows more of what your activity is now, what's going on with your agency at this point in time right now. They're usually from the beginning to the end of the fiscal year, or beginning of the fiscal year through the current month. So your year to date and then your current month as well. Okay, and that is my quick abbreviated version of financial statements. And as I had on there, being part of a board is a huge commitment. So thank you, all of you, for doing that. I've done it a lot myself for years, and it's very satisfying, but it can also be very overwhelming. So reach out anytime if you have any questions. I'm happy to help.
Okie doke.
All yours.
I think it's my turn. I do this presentation for my board members. It's really longer. This is just a piece of it, but I do it largely because people don't get told how to read these things. Everybody's always scared about it. So this one's called Oh Dang Financials. And this is my cheat sheet version of it. I don't yet have control. All right, it says I'm controlling. There we go. Thank you. We got it. Okay, so things to know about your financials. These are the things to know about our financials, right? We do our accounting on a cash basis. Get to that in a sec. We use the accounting categories that the IRS asks for on our year-end tax forms, those 990s. That helps us go, this is what we spent that we're talking about. And when we look at our 990, we move it to our 990, we know what we're talking about again. We love that. Our fiscal year runs August 1st to July 31st. Know when your fiscal year runs because it's going to make a big difference to you. And our income and expenses vary from month to month a lot. We do not have a whole lot of really steady expenses as we go. So don't worry, it'll be okay. Have a baby meerkat, let your blood pressure go down. It'll be great. All right. As the things about your financials, what is cash basis? A lot of smaller nonprofits use a cash basis. And so it's worth understanding. It's like using a checkbook. You count money in and money out only when the actual in or out transaction occurs, right? Same if you're checking your bank balance, in or out. But if you, for instance, set up bill pay, you'll find that it also takes into account what you will pay in the future. Right. So for cash basis, it's just when it comes in, when it comes out. So for instance, if we use a credit card to get an event catered in late September, it's not going to go on the books until we receive that bill in October and then pay for it in November. So there's a lag. That's why it says you might be overspending in the long term. And as Denise said, the budget shows you what expenses or income we anticipate. Other reports fill in the gaps. She's told you about those ones, so I'm not going to go into them very much. This is your new best friend, your income and expense report. because it shows you how much you've spent in each of your budget categories. It shows you how much money you've brought in and from where it's come in, and it compares those things, right? You need that comparison. Numbers in a void are useless, right? I can tell you that, we increased our budget line income 100%. And if I got like $1 last year and $2 this year, I did it, right? But you want to know it was $1 and $2, not 100%. So check that comparison and always ask, and he said this too, your financials get presented to you in budget to actual columns, right? That's that comparison, and then know what it is you're actually comparing. So looking at income really fast, what we have here is the top of an income and expense report. You can see over on the left, it's your income and expense categories. You can see the next column over there, that 9-month column, tells you how what the actual expenses and income time period is, right? So August 20th to May 21st, this is a year-to-date statement, right? Not a final statement. So it's covered 9 months, and we're comparing it to the annual budget, 12 months. Okay, make sure you check that. Sometimes, you compare 9 months to 9 months, depends on, how you do that. But make sure you know what you're looking at. The next column is dollars over budget or under budget. And then the final column, this is your really good friend, the percent of budget column. So when you're looking at it, you want to know really in your comparison, how much money you've spent or brought in compared to how much you expected, right? That's the one that tells you the story. So you want to ask about discrepancies, which is to say which ones aren't what you expected, right? So the big question is, why don't they add up, right? On the income end of things, you need to know financially, how does this affect our budget right now? And for this fiscal year, do we need to adjust our expectations this fiscal year? Like Denise said, COVID hit and everyone went, whoa, I don't know what happened to my budget. Okay. Expense, income, who knows anymore, right? It was crazy. But it tells you what you need to do in there. And really, because your business is the longevity of the organization, that income coming in on a daily basis is good, but you also want to know what is luck, what's planning, what's effort in those income and expense statements. The better you plan for it, the better you have a control over what you're doing with it. And that's your job as the board, is making sure you're around not just this year, but next year too. All right, so the trick is, Andrea needs to change to a different screen. Yes, I do want to continue doing that. Okay, really quick here, what I've got is a fake income and expense report for you to have a good look at. This is the same one that I just showed you, or it should be. So I can tell you what's going on with it. Again, here's your budget, right? 9 months is 75% of the way through the year. So you want a baseline comparison as you go all the way down that percent. You're asking how far off of it from 75% is it? And is it reasonable to be off of that, right? So program income, hey, looks really good here. We did great on sponsorships. Fantastic. We didn't sell a single ticket. What the heck happened? Right? The question there is, why didn't we sell tickets? Did we have an event? Did we just take sponsor money? What's going on? Right? So you want to check those kinds of things. I'm going to give you a few more examples as we come down here. Corporate contributions. Look, we expected $20,000 in. We don't have it, right? At 75% of the way through, are we like missing that thing, or are we still expecting it? Because that's a lot of money for us to be sitting on, right? Red numbers in the income portion are generally going to be red flags, right? They're going to be, are we getting that money in or not, right? Direct giving, I just want to point out, direct gifts are the ones that you can most impact. And so my question here is going to be, we're 75% of the way through the year. Why do we only have 40%, 39.12% of the income that we expected, right? Are we really in trouble now? Or is this something, because we expect that $20,000 and more to come in our final 3 months, right? I'm going to skip a little bit down here. This one, land lease income. So if you have that sort of that income that Denise was talking about, where you have regular earned income that comes in, if you have it come in regularly, any of those incomes that come in regularly should match up exactly. That should be 75% to 75%, right? Because, right, you just get that check each month kind of thing. Right? So for instance, if it's grant money and it comes in every 6 months, you need to see that every 6 months in there. Investment transfers. Do you know when you get investment transfers? If you have investment transfers, right? And overall, at this point for the transfers, it's pretty good to have, for total income, we're pretty good having 90% of our total income come in at 3/4 of the way through the year, but know where it came from, right? There was an unexpected gift in here, right? From corporate foundations. We didn't budget for $25,000, but it came in and that really saved our bacon. Okay, so make sure you know where the money's coming from, because if I hadn't had that in there, that number would look really, really different, right? So down here we go to expenses. Personnel is going to be your biggest expense a lot of the time, unless you happen to have facilities. That's going to be your next big expense. Right here, we've overspent on personnel. We've got 81.31% and 75% of the time. What did we do? Right? Are we overpaying someone? Did we give someone more hours because we needed that to happen? And are we going to be able to cover it when it comes down to it? Right? 81.31%. That's not a huge overspend, especially not in the kind of numbers I'm talking about, but it is something you want to know. Professional fees, accounting fees, look at that. So we budgeted for 3,200, came in at 36.5. What happened? Ooh, Andrea forgot to add the cost of the 990 preparation to the budget. Oh, bummer. Explainable, but right, put your note in there going, okay, that's what happened. This was a mistake that happened. Those happen. Trust me on that. All right, office expenses and stuff like that come through. Here we are, let's see, information technology. So hardware, we spent $918.79. We didn't budget any. So that made our information technology line just go crazy at 489%, right? What happened? We didn't budget for any hardware. Did we need new computers? What happened, right? These are the questions you want to keep asking. Is this looks weird, so why? Again, what equipment did we buy that we didn't plan for? Outreach and advertising, 75% of the year gone. We haven't spent any of our money on outreach. Why aren't we doing outreach? Okay, there's a big question for you. Skipping a little further down, travel and lodging, meals and transportation. We only budgeted $3,800, but we've spent almost $12,500. What are we doing here? Right, and we can see over here, 328.92%. That's crazy. There you go. You caught me. I took the staff to Hawaii for the new year. Okay, there you go. You spotted it because you asked the question. Well done, guys. Let's see, event supplies and printing. Over here, conferences, events, and workshops, all this stuff actually under the IRS is all your programs. It's a weird category, but there it is. And so this is all the program expenses that we had. So again, this is a vague category, event supplies and printing, and it's an overspend. And we're at 126% at 75% of the way through the year. What's going to happen? Are we going to be ready to continue, or are we overspending like mad? So here we are at the end. We're 9 months into the year, and we've spent nearly 100% of our budget, right? What are May, June, and July going to look like? Are we getting a lot of money in May, June, and July? I really hope so. Are we not spending anything in May, June, and July? It's not going to happen because you still have to pay those people, and that's more than 6% of your budget. Okay, so this is going to look kind of problematic. All right, that was my quick cover of the thing. You guys have a copy of it in the packet that Genevieve will be bringing out. I'm going to go back to, stop sharing here. And Genevieve, can you put that thing back on for me? I'm sorry. Mm-hmm. The thing. Somewhere down here. There it is. All right. So you're asking why about those discrepancies. Yes. Oops. You can see this, can't you? So the big question is, why don't the numbers match up? Do we have a windfall? Is there extra money coming in? This is where the rubber meets the road for you guys, because if you don't understand what those discrepancies are, you don't know what's going on. Okay, this is weird. There we go. All right, you need to know why. All right, so ask your executive director about the discrepancies. They're accountable to you for this, okay? Can she explain them? Do those answers make sense? And are there meerkats to help you along, right? These are the important things to make sure you're talking about. You are accountable to the IRS for these numbers, not the ED. The ED is accountable to you. You are the one who's accountable to the IRS. So don't blow this thing off. So know how to ask the right questions as you go through it, right? I ask those questions because I know what it looks like. What programs do you have? How do they work? When do we incur expenses, right? Expenses, what are our sources of income? How do we get that money in, and when do we get that money in? Is it a predictable source of income? And no, of course, meerkats will be here for you. Finally, that is a lot of stuff. You're not expected to be an expert. You need to just make sure you're asking what's going on. Ask your ED, ask your bookkeeper. Take your time. It's easy to be like, oh, well, I'm sure it's okay. Well, let's just get through this thing here. The financials are just such a pain anyhow. They make more sense the more time you ask, and the more time you spend looking at them. They get easier, trust me. And your executive director is actually legally responsible for getting you answers that make sense to you. If those answers don't make sense, you need to keep poking at them. I don't have to give them to you instantaneously. I have a little bit of time to go and get them. But if I don't come back to you in a reasonable amount of time and say, oh yeah, I can explain that one, that's something to watch for, right? Don't forget also, you have help, right? There are organizations in the community that would be perfectly happy to talk to you about your bookkeeping, including any accountants you work with, right? Have them come in and help you go through just setting it up at some point. They'll probably be a lot happier when they do your books later too. Community Foundation is there for you. United Way is there for you. Rebecca Rauschenberger, our part-time bookkeeper, has openings. Shameless plug for Rebecca. And Meerkat Manor, of course, is always available when you need to go sit and cry and just look at meerkats for a little while. Finally, this is us, YWCA, Eliminating Racism, Empowering Women. I'm Audra Rendell, the executive director, and I hope that was helpful for you. I hope I got it in 10 minutes too.
You did great, Andrea. Thank you so
You're welcome.
much. And that staff trip to Hawaii, are you taking volunteers? Can I come along?
Sure, they're never noticed. They don't look at those financials anyway. What the heck?
Thank you so much. Well, for this last section of our time together today, I just want to walk you through the Form 990. So Denise gave us a short overview of this, and what I wanted to explain about it, much of this comes courtesy of Julie Melton, who is with the Richland Community College Foundation. She presented at our board boot camp session at the Champaign Public Library back in September. And this is a piece that I think is really helpful for board members to understand. So what is the IRS Form 90, and what should you as board members be looking for on this form? So just a little background on this form itself. It is an annual information return from the United States Internal Revenue Service. And it's providing the public with financial information about your nonprofit organization. So the IRS uses this as a tool to gather information from tax-exempt organizations. And then it's also a way for them to educate these organizations about tax law requirements and to promote their compliance. So nonprofits also use the Form 990 to share information with the public about their programs. There are different versions of the 990. So depending on your organization's size, there's the 990, the 990EZ, the 990N, which is also called the e-postcard. It's the simplest and most succinct version to fill out. Which form your organization must file generally depends on its financial activity. The lower the gross receipts, the simpler the form that the organization can fill out. It's important to know that tax-exempt organizations must file the annual information return unless if they have an exception. So check with the IRS about that if you have any questions. Where can you find these 990s? Well, they're publicly available, which is good for you as board members to know. And many organizations will want to share these publicly with donors and people that come across your website. So it might be posted on your website, but you can also search for these. So if you see that web address at the bottom of the screen, guidestar.org is a nonprofit database. It's free to have an account there, and you can pull up 990s from any nonprofit organization in the United States. And you as board members, your names are actually listed on this form. So I want to walk you through what 4 things that board members should know about their 990. So the first, and again, this is courtesy of the foundation at Richland. I'll share their full handout when I send an email follow-up after our session today. Form 990 is a marketing tool. If you look at part 3 of the Form 990, you'll see the mission of the organization as well as its most significant activities. So you as a board member, I'd encourage you, ask yourself, do these explanations tell prospective donors, grant makers, and the public what value to the community your organization provides? This is an opportunity for you to tell your story. So go back and look at your last 990, and is that doing a good job of telling your the story? Secondly, is organization compliance and governance. So you'll find this in parts 4, 5, and 6. This will help you look at your organization's board structure, policies, and procedures to ensure the board has access and the opportunity to regularly review these documents. Now, here's where your names come in. You are listed in section 7 with officers, directors, trustees, and key employees, including the highest compensated employees. So this section will actually show reportable compensation to your chief executive. So file this away. Many of us in the nonprofit world who are looking at different job opportunities and might be curious, what is the financial compensation of X CEO at X organization? You can find this, you can look this up, and it's just an interesting little tidbit if you're doing a compensation salary comparison. So that is in 4, 5, and 6. Third thing to look for is financial information. So in parts 8 through 12 of the form, you're going to see your organization's financial position. Now, this information should mirror the audited financial statements of your organization with some adjustments. Potential donors and the public can scrutinize this section to see how much your organization spent on fundraising and management expenses versus actual program services. So pay attention as board members, hone in on that and make sure that's accurately reflecting your financial position. And then last thing to look for is public charity status. This is in Schedule A. Scroll down to parts 2 and 3. You'll see the percentage of gifts coming from public support. Now, the IRS states that at least 1/3 of donations must be given by donors who give less than 2% of the nonprofit's overall receipts. That is a mouthful. There are exceptions to this, but it's an important percentage to be aware of so that your organization maintains its public charity status. So in short, take a look at your organization's 990. You can go on a GuideStar and look it up. There's a lot of information there. There's no legal requirement that you as board members be provided a copy of this before it's filed. But it's important to be confident of what's in your organization's form, to use the form well, and to know that it's a very public view of your organization's activities, governance, and finances. So it would be a good thing for you to look up. And then as you're making donations or prospecting other organizations, take a look at their Form 990. There's a ton of information there that can help you make informed strategic decisions, both as board members and as just members of the public. So with that, we are getting to our time of questions and answers. And so this is your time to put in the chat, or if you would like to voice a question, I'll encourage you to raise your hand, and you're welcome to ask us anything. We'll do our best to respond to your questions. So I have asked my colleague Angie if she would help monitor the chat. Angie, would you be willing to voice any of the first questions you see?
Hi, everybody. I'm happy to do that for us. So Mary Ann Downey was asking if you could repeat the statement about the 990 must mirror your audited. I think that was yours, Genevieve.
Yes, so that your financial position, that information should mirror your audited financial statements. There can be some adjustments here, but basically what you're putting into that 990 will come from your audited financial statements. Does that answer your question?
And then for young organizations, when is a good point to perhaps have a money market account or a CD that restricts access to some of your cash, though, correct? Is it a good idea to create an endowment to ensure you have some steady, predictable income?
Ooh, do you want me to take that one?
Please, that'd be great, Denise.
Okay, first of all, an endowment is a lifetime commitment. So be very careful when you put funds into that, because the purpose of an endowment is that it will be there forever and you will use the earnings off of it for your day-to-day operations. Okay, so be very careful with that. Especially for a new organization or agency. As far as a money market or CDs, really, I would look at your interest rates that are happening right now, which I think they're probably okay. So look at your interest rates, but also most agencies have an investment policy. So you want to look at the agency's investments policy and see what they have. They may have a rule that says you have to have 18 months of operating expenses sitting in your checking account just for emergencies. So make sure that you're following that. And I don't think we really mentioned, but as a board member, you want to look at your bylaws too, to see what you're supposed to do and what you shouldn't do. Okay, did I answer that okay?
And I'm just going to put in a little plug on the endowment question. We have received here at the Community Foundation just a lot of interest from nonprofits that are wanting more resources about sustainable fundraising processes, including setting up a capital campaign, establishing an endowment. We're going to begin a new series next year, 2023, with some sessions addressing these topics. So stay tuned, join our e-newsletter list, follow us on Facebook to get more information about that. If your organization is in a position to potentially consider setting up an endowment, we'd love to provide you with resources on how to do that.
A couple more. Are there resources for an organization to work with someone to learn if they are using best practices in keeping their books?
I'm not sure I exactly understand what's being asked there. I think your audit answers that. If your agency has an audit, I know a lot of times nonprofits don't, especially the smaller ones. But if you can budget for it, I highly suggest that you do. Yeah, I'm not really sure. I don't think I really answered that.
Mitch, do you want to clarify, Mitch?
Yeah, we keep, we have, I'm a volunteer treasurer and I inherited our QuickBooks system. And I don't know if we really, I can produce all these statements, but I don't know if we track things the way we should. I know there's changes I'd like to make, but I really want to talk to someone to see, are we keeping the books the way other organizations keep their books, or did we just make stuff up, or is there some combination?
Those are really good questions. So I think that it would depend on whether or not you do program accounting. That's a big thing that a lot of agencies have a hard time with, because, so for example, you as an employee may work on 3 different programs. And so you have to allocate those expenses. And that gets really, really tricky. And to throw in the fact, if you have grant funds, it gets even trickier. So I'd be happy to chat with you about that. I mean, obviously I can't audit your financial statements for you, but I'd be happy to chat with you about that.
Yeah, we actually, we do an audit, but yeah, but it's just the way we have our QuickBooks organized. I don't know if this is right.
Mitch, we,
Yeah.
when I got a new bookkeeper, we sat down with our auditor. He spent an hour or two just walking through it with us, and we completely reset up the QuickBooks. And that's how we ended up following the 990 categories, which make, like I said, a lot of sense when you're looking across financials. Because it's really easy to be like, well, I make up my own categories, of course, right? And so when you inherit something like that, it might be worth your while to see if you can ask an accountant to come in and just help you say, okay, is this going to make sense? Is this going to cover everything? You know, if I have to have an audit, or when I have an audit, are they going to be able to figure out what I'm talking about?
Thank you. I'll check with our auditor.
Okay, and what would be a restriction on donations? Why is there an accounting difference between restricted and non-restricted donations?
So restricted donations, the only person who can restrict a donation is the donor. Okay, so if you're out in the street, let's say I'm the ED of an agency, and I'm out in the street and somebody hands me $20 and says, will you take this to your agency and spend it on children's coats? That's a restriction right there. If I accept that $20, I can only spend that $20 on a child's coat. Okay, so you have to be very careful about how you accept your donations and how much you want them restricted. You really don't want them restricted. You want to be able to put them in your operating fund and use them for whatever you need to use them for at that point in time. That the agency's statement of financial position that I showed you, they have things on their books that are 15 years old because somebody wanted their $10 to go to art supplies for kids and that kind of stuff. So just be very careful because you have to keep really good records of that stuff.
Okay, and then Genevieve, one last, Ruth is asking if we can help with some websites where nonprofits could get support for fundraising. She's joining us from Nigeria, but I think we do have some resources available.
Yes, Ruth, if you'd like to email me, Genevieve@cfeci.org. I'll share that on our final slide. I'd be happy to follow up with you directly on that question. And
That would be very kind of you. Thank you so much.
Sure,
I'll keep
absolutely.
in mind. Thank you.
And
Thank you.
Andrea, I have a question for you. So I love that we have both, the accounting hat here, as well as kind of the boots on the ground executive who's looking at these statements day to day. So as an executive director, what are just like the most helpful questions a board member can ask in a board meeting about the financial statements? And then a follow-up, what do you wish your board members knew, like new board members knew about your financials before they come in? What would be helpful from your vantage point?
What I want them to ask is those questions about, why is this not looking like we budgeted for, right? Because that gets to the heart of whether we're spending the way we said we'd spend, whether we're getting the income in, right? In that fake thing I gave you, our direct fundraising is horrible, right? We are really in trouble on that fake spreadsheet because, it's plastered over by an accidental gift, right? Of $25,000. I can't remember what I put in there. And, it's very easy for you to look at just like the numbers on the side and go, oh, we got plenty of money. We're doing good. But that's not the question, because it's how did we get this money in? And really, is it because we did something that we can replicate, right? Because you don't want to be like hoping somebody will just drop $20,000 on you next year. You need to have a plan for that, right? So if asking those things would be important, I point those things out when I talk to my board about the thing. I'm like, see this is saving our bacon today, but this is not something we can plan for. We still need to work on getting those other donors. We still need to work on this other money coming in. And really what I wish they would know when they come in is basically what I've gone over, and the things that, you know, I do this as an hour long presentation with time for answers and questions and things like that. And I wish they would just like sit down and go, okay, I can do this, right? And that's really why I do it that way, because it does look really intimidating when you see those things, even coming out of QuickBooks, which is pretty easy to understand, right? It does look really intimidating, and it can be very hard as a board member, especially if you're new coming in and don't have a lot of experience, going, can you stop and explain all of that to me? Right? You feel dumb or whatever, but I love it when they ask questions like that, because that means I can show them we're doing a good job. I can explain to them how they need to look at it again. You know, we have a better understanding between the two of us how that organization is working or not working if we have those discussions.
Awesome. I just want to echo that. Those dumb questions, dumb, they're not dumb. And in fact, you are educating some of the board members who are sitting there that might have been around for, you know, a year or two longer, but they're just not asking the question, and they need to hear it too. So don't be afraid to ask those basic questions. You're doing a favor to others that are around you, and your executive director is happy to answer. It's a teaching point. Denise, a question for you, just as you're auditing financial statements, working with nonprofits who might want to be doing a bit of cleanup, what are just some common pitfalls or things that you would want them to pay attention to?
So right now the hot topics are leases, of course, and how leases are accounted for, but that's way over what we want to talk about today. But any agencies that get grant funds, the other hot topic right now is revenue recognition. When do I record that revenue? So if I've just found out that I'm going to get $1 million from a grant, do I put that on the books now? Do I put that on the books in 2 weeks? When do I put that on there? So that's a big topic now. So be careful of that. And really just pay attention. If you notice that your bank accounts have really fluctuated, ask why. You know, that's a big indicator of maybe something's not right. And I can't stress enough, just ask the questions. You know, even like Andrea said, no question is dumb. You may feel like it is, but it's really not.
Thank you so much. And I'm seeing a question in the chat. Can you make a suggestion on how to locate nonprofits that may need board participants or members? Contact me. We have a number of nonprofits that have filled out a board match form. They are in need of board members, and I would love to connect you. In fact, next year, we are planning a board match expo at the Champaign Public Library, a time for local nonprofits in Champaign-Urbana to showcase their volunteer opportunities, including what I've heard as the upper echelon of volunteer service, serving on a board of directors. So we would love to help facilitate those matches. The United Way as well has plenty of organizations on their roster that are in need of nonprofits. So that would be great to connect you in that way. You're welcome. Angie, any other questions I might be missing?
Yes, I need to unmute. Vanessa just asked if your organization's working on a cash basis, wouldn't you count the grant funding when you actually receive the grant funds?
Yes, if you're a cash basis. Lots of times agencies are not cash basis.
Great, thank you. Any final questions? This is your time to ask. And if not, I love to end ahead of time. So you are welcome to reach out to us here at the Community Foundation following our session today. I'll send an email out with the slide deck that we reviewed today, the mock financial statements from Andrea, and some other resources that will be helpful hopefully for you to pass on to your board members. Let me just say thank you to Denise and Andrea for your time and generosity of sharing from your experience. We appreciate your different vantage points and just you taking the time to be here to share with us today. Can you all join me in thanking them? Thank you.
Thanks for having us.
Thank you. And I'm just
Thank
going to
you.
flash here a final slide with our contact information at the Community Foundation. Okay, here we are. We're on University Avenue, close to downtown Champaign. That's our phone number and our website. We'd love for you to follow us on Facebook, join our e-newsletter list through the website. We have a Facebook group through our Center for Nonprofit Excellence where you can ask questions and share resources with your peers. Mark your calendars for our next board boot camp will be on February 15th. The new year, and our topic will be understanding the nonprofit sector in East Central Illinois. I look forward to using that opportunity to share some research that a Geese Action Learning class from the College of Business has done for us and to present that information with you and for you so that your organizations can use it in a helpful way. With that, I'm going to go ahead and end our recording.